Christopher Leslie.
Thank you, Mr Deputy Speaker. This debate may well have a title that encourages honourable members to flee the chamber, and I would encourage them to, on their way out, possibly go by the House of Commons Library, who can explain why central counterparty clearing services are so incredibly central to the infrastructure that underpins business, corporate finance, the nature of our economy, and why the circumstances of BrExit potentially could have quite a significant effect on them. Just to give you, Mr Deputy Speaker, a sort of sense of scale in this, the British economy, I suppose if we were going to sort of say in dollar terms value, is about $4 trillion. That'd be 4,000 billion dollars of value. But in terms of the number of derivative contracts, LCH, one of the biggest central counterparty clearing services owned by the London Stock Exchange, this year alone cleared $812 trillion worth of derivative contracts, largely interest rate swaps. This is a mind-boggling sum of money, but the reason I'm raising this particular issue today is that it is an internationally important liquidity pool, a facility that the UK specialises in, but obviously with the UK leaving the European Union, the jurisdiction in which these CCP operations takes place could well be fragmented, and that could have potentially destabilising effect on the operation of central counterparty clearing services. So the question is, if we do crash out of the European Union, or if we don't get the right sort of regulatory framework, what will happen to those trillions of pounds, of dollars worth of derivative contracts? And it's one of the most significant cliff-edge issues in BrExit that, personally, I don't think has had anywhere near enough attention and coverage as it ought to have. Just, again, a little bit of background, perhaps an example of what a CCP operation would do, what would be cleared. Imagine a construction company getting perhaps a big loan from a bank to build some houses, a housing estate or whatever. Now, that loan is quite a big liability for the business, and often it will get that loan with variable interest rates. In order to manage the liability, the construction company may want to swap it for something a little bit more predictable, a little bit more stable, perhaps a fixed rate interest arrangement. That sort of swap process, interest rate swap, is now common and garden part of corporate business finance, and that's why, if we're talking about stability in the economy, these sort of products, though complicated and often the wiring that goes on behind the scenes, really are quite important to how we stabilise our economy. In recent times, central counterparty clearing facilities have developed to make sure that companies don't necessarily have to do this bilaterally with one another and make these arrangements. They can clear them through a central fund which has a sort of insurance buffer arrangement just in case there is default on those particular contracts. And there are a number of layers that companies like LCH can go through in order to cope with the default. We saw a recent default scenario in Norway recently. Energy traders in Norway was overexposed. Central counterparty arrangement absorbed much of that default shock and saved that from a contagion that could potentially have had wider ramifications around the world. It certainly operated with Lehman Brothers and others in the financial crisis. And since then, policymakers worldwide have recognised that central counterparty clearing is a really important pillar of our financial stability mechanisms. So these are important insurance policies. It's an international pool of liquidity, and London, the UK, is right at the heart of those particular operations. Yes, of course.
I thank Warren for giving way, and he's bringing attention to a very important section of issues that I certainly wasn't fully aware of, and I think he would probably agree with me that we cannot simply have a sort of it'll be all right on the night approach from the government when we have such complex arrangements. We need a surety on them. But was he interested, like me, to see earlier on the Commissioner Barnier, saying that the very misleading press reports there had been about a deal on financial services and many of these matters being closed was actually not the case, and that there was in fact misleading reports?
Well, my honourable friend rightly takes us to the more contemporary story about what's happening with these, because Brexit has put everything in limbo. Will these CCP operations be able to continue to service the vast majority of euro-denominated interest rate swaps or derivative products? The European Union had been developing new supervisory arrangements that would have included the UK. Brexit came along, and of course those have all now been put into abeyance because the UK may be taken out of those jurisdictions. So the time has ticked on. We're now 5 months, maybe less than 5 months, away from the moment of change, and yet we still don't have any certainty about what will happen. There have been various rumours. I think last week the Governor of the Bank of England, Mark Carney, highlighted, I think it was £41 trillion worth of outstanding contracts that already exist that could be forcibly voided, that could fall out of legal certainty if we don't get some sort of arrangement put in place. Now, earlier on in the week, European Union European Union Commissioner Vice President Valdis Dombrovskis indicated that the EU might allow the UK CCPs after Brexit to operate on a temporary basis with some very strict conditionality. Of course, there was the report in the Times today that maybe in the negotiations there was some sort of sense in which UK financial services companies, including these CCPs, would be able to operate on an equivalent basis, which isn't as good as the arrangements we've got, where we are part of being around the table and able to make the rules on regulations. We would be a rule taker, but of course we may be allowed access to European markets and potentially vice versa. But the danger with that is it's very precarious. It could be switched off at a moment's notice if policymakers fell out for whatever reason. And of course, as my honourable friend has pointed out today, Commissioner Barnier poured a big old dose of cold water all over that, saying, oh, you shouldn't believe everything you read in the paper. He reiterated how equivalence was really in the hands of the European Union to decide whether it continued or not. And really, it isn't, it wouldn't be an ideal situation at all. And the risk is that we would need to see central counterparty clearing services develop quite rapidly in other jurisdictions in Europe. Of course, the Americans will have their arrangements, but it could start to undermine the centrality of the UK in this, and that would be a great pity, because I think the UK has expertise here, and we have, I think, a relatively good regulatory approach working with the European colleagues. So the main question before the Minister comes up and answers that I want to put to him is, what is the government's attitude to the future long-term, stable, permanent regulation environment? Are we going to align ourselves closely, in fact, in harmony with the European Union regulatory framework for central counterparty clearing arrangements? If that is the case, then I think it would be very useful to know that that is British government policy at this stage, because then that might enable something to be built on equivalence, possibly even moving to UK still having a say in the regulatory arrangements. My own view is that the public should be given the chance to think again about this whole thing, and if they want, then there should be a people's vote so that the option to remain is still viable. And I think nothing has been decided at this stage that should prevent that from happening. But if we are going to be leaving the European Union, it would not be a good thing to do so and put all of these things up in the air, fragment the financial safety regulatory arrangements, and potentially put businesses and jobs and livelihoods at risk. Yeah.
I don't want to friend for giving way, and I actually used to do this sort of thing for a living as a derivatives lawyer. It's not something I own up to very often these days. But I was involved, working in the city at the time when we were preparing for the Millennium Bug, and also when the euro came in. I was involved in the clearing up some of the mess after the Barings collapse. And what happened, particularly with the Millennium Bug, is people said afterwards, well, there was a big fuss about nothing, and you sort of totally alarmist and exaggerated this was going to cause chaos. What they don't realise is how much work had to go on behind the scenes to make sure that it didn't happen. And I think there's a real danger of complacency with situations like this as well, where people think that it'll all sort itself out. And does my friend agree?
I do agree, and I don't think the work is being done. I think, frankly, there should be more leadership. We're in a rudderless situation right now. Both sides, of course, the regulators, we have a lot of regulators, the Bank of England, ESMA, and others, but of course they are subservient to the political policymakers who I hope they're appraised of these issues and they know the scale, but I'm not that confident that they are, or that it is high up their agenda. I'm not sure I've heard the Prime Minister talk about these things, let alone the Chancellor of the Exchequer, and so perhaps the Minister will be able to enlighten us on this. I just want to come to an eventual conclusion by just explaining why there might be a number of problems. If we are going to... There'll be a lot of contracts now being discussed between firms that are not yet cleared, and in order for if we don't have the option of central counterparty clearing, particularly from the European side, I suppose, whether they can access London, then what will be the stability risks that are generated in those particular scenarios? Will we lose liquidity? And when we lose liquidity, will we see costs going up for businesses? And those costs, when costs go up for businesses, will get passed on to customers. It will have a drag effect on the worldwide economy. For those contracts that are already cleared, that are already in existence, well, it's to do with whether they will still be extant after the 29th of March. Because if there's a whole load of existing, whether they're European or wherever, contracts that are in place, many of them have clauses that require notice to be given if their legal validity is due to expire. They could be 6 months, they could be 9 months. Well, we're certainly coming into the period now where the holders of those contracts are going to have to start giving notice to say, we are not certain that these existing financial contracts will be viable or in place because of the risk of falling into legal no man's land after the 29th of March. And so this is a clear and present risk to the stability not just of our economy or Europe's economy, but to the worldwide economy. And although this can seem a very dry topic, everybody should stay focused on the hundreds of trillions of pounds worth of value that are potentially able to have an effect on the wider economy. So, Mr. Deputy Speaker, I would like to press the Minister. What are we going to do to come to a swift conclusion, certainly within the next few weeks on this particular issue? I know that the UK has offered to the EU that we will allow a temporary access to UK firms, and obviously this question is whether this is going to be reciprocal, but if we're going to offer that, are we going to legislate for that, to put that guarantee into law? Because I think that could be something that could be done right now. It's really trying to find out what is the plan of the Treasury. Do we know that the government care and are taking interest in the stability of the UK and European economy, businesses, jobs and the livelihoods of all our constituents who will undoubtedly be affected by this issue?
Thank you, Mr Deputy Speaker. And firstly, I'd like to congratulate the member for Nottingham East on securing this debate. And I thank him for what he said. He set out very clearly, I think, the risks and the need for clarification. I'm very happy to give him the answers to the questions that he's posed to me in his very thoughtful and helpful speech. I would firstly like to acknowledge the issue of no deal, and I would like to clarify from the outset that the government firmly believe that it is in the interests of the EU and the UK to strike a deal. That remains the clear goal on both sides, and we are confident that that will be achieved. And I want to reassure him and the whole House, Mr Deputy Speaker, that an enormous amount of work and dialogue is going on at all levels in order to understand the issues that exist on both sides. Our proposal for the future UK-EU relationship in financial services seeks to be both negotiable and ambitious, and it is founded on preserving the economic benefits of the most important financial services traded between us and ensuring stable institutional processes for governing the relationship into the future. That's the best way to protect financial stability and open markets, and it's in the interests of businesses and consumers on both sides. And just for clarification, under our plan, we would build upon the EU's existing equivalence regimes, but expand their scope to recognise business activities that are in the interests of both the EU and the UK, but not covered by the existing regime. Now, I'd be very happy to give way.
Very grateful for the Minister allowing me. Just sort of stepping back from the specifics, on the policy stance of the UK government, are we intending to remain in lockstep with our European neighbours in terms of the regulatory approach that we take, as a matter of philosophy? Because, of course, the Americans would like us to perhaps depart from that, but it feels to me important for our existing market access that a commitment is given to preserve some of the harmonies we already have.
Very, very happy to respond to that. What we're seeking to do is recognise that we start from a common starting point, and that what we have acknowledged in the White Paper in July is that there is an appetite on both sides, on the part of the UK and the EU, to retain the autonomy around their supervisory bodies. But what we need to do is develop a strong bilateral relationship in the future, should either side wish to innovate and deviate from existing alignment, so that we can then have a strong bilateral dialogue on how to resolve any disputed areas. But I want to reassure the honourable gentleman that we are not seeking to differentiate ourselves and to become a sort of bargain basement regulatory environment. That we secure such significant investment in the City of London because of the world-class nature of our regulatory environment. And in fact, we have led the way in many of the dialogues over the years within the EU. So our aspiration is an ambitious one and is based on a strong trading dynamic with the EU into the future. But I just want to now move into the specifics, because the honourable gentleman has raised some very significant and sensible points. We are prepared for all outcomes, including no deal, and the government recognised that in the event of a no deal, this is a critical issue. We are not complacent, and the honourable gentleman has set out very clearly the stakes that are so high for jobs and livelihoods up and down this country. So, Mr Deputy Speaker, as the FPC has said, the Financial Policy Committee, that there are £69 trillion worth of centrally cleared derivative contracts that could be affected. And central counterparties, or CCPs, as the honourable gentleman set out, are financial institutions which firms use to reduce counterparty risk. And CCPs do that by standing between the parties of a trade, becoming the buyer to every seller and the seller to every buyer. And this guarantees that transactions will be honoured if the other party defaults. And CCPs are central to the UK and the global financial system. They reduce risk and ultimately improve the efficiency and resilience of the system as a whole. Any disruption to this system would affect large banks and institutional investors who use these clearing services when hedging their risks. And there are key issues for CCPs and their members. First, when the UK leaves the European Union, EU CCPs will not be recognised to provide their clearing services to UK firms and vice versa. And second, there is legal uncertainty about whether EU clearing members can continue to meet their contractual obligations to UK CCPs. And this disruption is particularly acute for EU firms using UK CCPs. And the ECB estimate that UK CCPs clear approximately 90% of euro-denominated interest rate swaps used by euro area banks. And the only industry mitigant available would be to close out or transfer the contracts EU clearing members have with UK CCPs before March 2019. But as the FPC has said, the movement of such a large volume of contracts in a short time frame would be costly, would strain capacity in the derivatives market. So the importance of the financial services sectors of the UK and EU has been noted already in this debate, and it is really critical that we acknowledge that and we respond to these challenges wholeheartedly. And I spend my time as the Minister promoting and preserving and standing up for the benefits of the sector for the whole of the United Kingdom. It's not just the City of London, it is into Bristol, it is into Nottingham, it is into Edinburgh. A British asset as much as a European one as well. So this government remains committed to agreeing a close future relationship on financial services with the EU that preserves the mutual benefits of our uniquely integrated markets while protecting financial stability, consumers, businesses and taxpayers across the UK and the EU. And is one that must take into account that the UK is a global hub for these clearing services. So, as I said earlier, whilst it remains entirely unlikely that the UK will leave the EU without an agreement, we are prepared for all outcomes. And I want to go into some detail now on this no-deal situation. So we have committed, as the Honourable Gentleman referenced, to unilateral action to resolve the risk of disruption as far as possible on the UK side. And colleagues will be aware that the government has already laid draft secondary legislation that will establish a temporary recognition regime for CCPs. This regime will allow non-UK CCPs to continue to provide clearing services to UK firms for a period of up to 3 years, while those CCPs apply for recognition in the UK. My right honourable friend, Lord Bates, in the other place, debated the SI through the Lords on Tuesday, and a debate is arranged for the Delegated Legislation Committee in the Commons next Monday. The pack's ready for me to go home to Salisbury with to prepare. And as has been highlighted, any successful mitigant to the clearing services problem requires action, though, by both the UK and EU authorities. So I welcome the announcement by European Commission Vice President Valdis Dombrovskis that the EU will, I think on Tuesday of this week, that the EU will, if necessary, to address the financial stability risks arising from the UK leaving the EU, act to ensure continued access to UK CCPs on a temporary basis. Now, it is right that the EU authorities will have to set out further details on their plans. We would welcome that. But this announcement is a positive step ensuring the stability of the financial system for the UK and the EU. So the government is committed to working with our EU partners to identify and address risks relating to the UK's exit from the EU. And we are supportive of continued engagement and cooperation between our regulators. This is continuing, including through the technical working group convened by the ECB since April of this year and with the Bank of England, and is evidence of our shared interests in these issues. I acknowledge what the Honourable Gentleman has said with respect to perhaps the lack of detail coming out of that. I think that is a condition of the Commission's negotiating stance. We respect that, but we will continue to engage and observe what is going on. Now, there are suggestions from some in the EU that UK CCPs pose a risk to the EU's financial stability, and this is the impetus behind the proposal to revise the framework for supervising third country CCPs, including the so-called location policy. UK CCPs are truly global institutions, And we recognise there are legitimate questions about the future supervision of UK CCPs with EU members once we leave the EU. We should take a stable and cooperative approach to the supervision and regulation of globally active firms. And this should include the ability for regulators in different jurisdictions to defer to each other based on comparable rules. And this is a principle which the EU and the UK have committed to at the international level. Some of the measures currently under consideration by the EU do undermine this principle and can't be seen as an enhancement to the existing equivalence process. And in particular, a location policy would be a poor solution that would unnecessarily harm investment in Europe. It would increase costs for European firms and ultimately undermine financial stability. We are making that case, and I'm sure those that use the CCPs will be making the same case. But I would want to conclude by thanking the Honourable Gentleman for raising, in a very thorough way, some very legitimate issues at the core of these negotiations. I want to reassure him and the Honourable Lady from Bristol East who contributed to this debate that the Government is not complacent on these matters. I'm acutely conscious of the large number of statutory instruments that I will be taking through over the coming weeks, but dialogue is continuing at all levels as we seek to reassure the City of London and the financial services industry across the United Kingdom that the Government is prepared for all outcomes, though working determinately and passionately to the best outcome of a good deal that recognises the centrality of financial services to the UK economy.
Question is this House to now adjourn. As many of that opinion say aye. The ayes have it, the ayes have it. Order, order.
Just stop.